People who trade stocks are broadly defined into one of two groups: institutional investors and individual investors. Institutional investors are the professionals who manage the trillions of dollars invested in mutual funds, investment banks, hedge funds, and the like. Individual investors, also referred to as retail investors, are people who independently invest for their own private accounts. Studies have shown that institutional investors, who account for roughly 70% of the trading volume in stocks, can and do move the market due to the large amounts of money they invest with. Because of this, the market has a tendency to move in the same direction as these institutional investors. Here at Zacks, we have always known about the power of the institutional investor. Through the Zacks Rank, you can benefit by getting into the stocks that are highly sought after by these large professionals due to their focus on earnings estimate revisions. Most institutional investors attended prestigious business schools where they were taught a number of classical financial models, many of which were designed to calculate the fair value of a company and of its shares. Almost without exception, these valuation models focus on earnings and earnings estimates. Very simply, if you raise the earnings estimates used in the model, then it will create a higher fair value for the company and its stock price. For example, if an analyst believes a stock is worth 20 times next year's earnings, a PE of 20, with an earnings estimate of $1 per share, that's $1 estimated EPS, then it would be under its fair value at any price below $20. That's a PE of 20 times the $1 earnings estimate, equaling $20. If the analyst changes his forecast and believes the company will instead earn $1.10 per share, the fair value would then be $22. That's the PE of 20 times the new estimate of $1.10, equaling $22. Institutional investors then act on these changes in earnings estimates, typically buying those companies with rising earnings estimates and selling those with falling earnings estimates. As you can see, an increase in the earnings estimate can translate into a higher price for the stock and bigger gains for the investor. It's also important to note that it can take weeks, if not months, for an institutional investor to build a position given their size. The individual investor, however, who can get in at the first sign of upward earnings estimate revisions, like those with the new Zacks #1 rank, has a distinct advantage over these larger investors and can benefit by the expected institutional buying that will follow. It's why Keith S. of Tulsa, Oklahoma writes, "I started using Zacks in 2003 and have beaten the market every year since then."